Did you know that analysts believe the price of Tesla stock will eventually rise to $10,000? Although there is still disagreement on the current valuation of Tesla stock, analysts predict that the electric vehicle manufacturer's shares might potentially hit $10,000 in the near future. To find out more, keep watching and listening. As previously indicated, opinions on Tesla's worth are constantly disputed by supporters and detractors. Some project an unachievably high valuation for the business, while others offer incredibly low estimates. Naturally, the so-called premier electric vehicle manufacturer is meeting the needs of Tesla fans while falling short of detractors. Watch today's video to learn why analysts think Tesla stock will eventually reach a $10,000 price tag. Since its launch on June 29, 2010, Tesla's stock has increased by an astounding 24,389.7%, hitting a high of $1,070.70 and change recently. As per an investor's business daily review of data from S&P Global Market Intelligence and MarketSmith, Tesla surpassed all the major stocks on the midsize S&P 400 and S&P 600 small caps, as well as every single large firm that is currently in the S&P 500 on a percentage basis. With an increase of 11,424%, NVIDIA is the only S&P 500 stock that has come close during that period. 10 years ago, if you had invested $10,000 with founder Elon Musk, your investment would now be worth $2.1 million. This equates to an average annual return of more than 70%. During that period, the same $10,000 invested in the S&P 500 increased by just $274 to $37,376. That's only a compound annual growth rate of 14%. It's nearly impossible to comprehend the extent of Tesla's surge. Tesla's market value increased by $1 trillion to reach $1.18 trillion over the previous 10 years or so. It has surpassed Facebook to become the fifth most valued firm in the S&P 500. As of right now, Tesla is the most valuable car company in the world, valued at almost 5 times that of Toyota Motor. Tesla has shown to be a profitable venture lately. Since its founding in 2003 to 2020, Tesla has had annual net income losses. According to analysts, 2018 is the year that Tesla goes even deeper into the red. On an adjusted basis, the business is projected to earn 8.94 cents per share in 2022, up roughly 300% from 2020. Analysts predict that Tesla will earn 7.18 per share, or $8.7 billion, even after deducting all costs. Warren Redlich, a well-known Super Bowl in the Tesla community, attended Rice University, Stanford University, and Albany Law School. In 2019, he announced his retirement from the legal profession after 26 years practicing criminal defense and personal injury law. Warren started creating videos about Tesla, SpaceX, and other relevant subjects. Redlich added his 2 cents, while other investors and analysts discussed why he believed Tesla was leading the EV market. He clarified that one reason Tesla is so far ahead of other firms producing electric cars is that they have nearly finished developing fully autonomous driving, FSD, technology for mass market distribution. Subsequently, he presented the battery revenue model to illustrate the remarkable potential of Tesla and, in turn, the stock's worth. A $30,000 car less a 50 kilowatt-hour battery pack equals, according to the aforementioned model, less $600 in income per kilowatt-hour or $600 million per gigawatt-hour at 1 terawatt-hour. Tesla makes $600 billion a year and plans to reach 6 terawatt-hours by 2030. That is a price-to-sales ratio of 5 times revenue, or over $3 trillion. Its market value is $15 trillion. Based on the present price and excluding any potential share price splits, it may be calculated that the share price of Tesla stock is approaching or surpassing $10,000 per share. Others questioned what would happen if Ford, GM, and VW started making electric cars as well, but Warren just wrote them off as real competitors because of how far behind Tesla FSD they are. In addition to the battery revenue model, Redlich also introduced the robo-taxi model. In response to a question about how Tesla could reach an absurd price, he stated that these two models demonstrate precisely how Tesla can prosper in the near future, and that the valuations, while looking exorbitant, are actually reasonable. Regarding his robotaxi concept, he mentioned that Tesla CEO Elon Musk stated in a side note at the Autonomy Day presentation, "We're going to have a Tesla-owned robotaxi fleet of 10 million vehicles." Additionally, he said that every robotaxi will turn a $30,000 profit annually. That is a $30,000 profit for the individual owners of the car who operate it as a robotaxi, not for the fleet of robotaxi owned by Tesla. Redlich claims that if these figures hold true, 10 million cars will turn a $30,000 profit year. Redlich stressed that these are both understatements of where he believes it's headed. Do you believe that Tesla's stock might ultimately be valued at $10,000 per share in the future? Post your ideas in the space provided for comments below. Assuming these figures once more, 10 million cars earning $30 million annually equates to $300 billion in profit. When we fast forward to 2030, for instance, we see a price-earnings ratio of 30%, which is incredibly low for a corporation experiencing such rapid growth. Excluding all earnings from Tesla Energy, all sales proceeds, and all revenue from Tesla. At this point, the firm is reportedly producing 20 million cars annually. Consequently, a share price of $9,000 is equal to a price-earnings ratio of 30%, or a market capitalization of $9 trillion. That translates to a share price of $9,000 and a market capitalization of $9 trillion. In today's currency, how much would you buy for a stock that in a few years will be worth $9,000? The current price per share is approximately $700, but the stock used to be valued between $2,000 and $4,000 each. This underestimates the robotaxi model and Amit's dojo as a service and battery revenue modeling, just like it does with Tesla Energy. Redlich continued by saying that Tesla has enormous income potential. In a 2020 CNBC interview, billionaire investor Ron Barron went all in about his large stake in Tesla, saying, "There's 10 times more to go." I already informed you that I believed we would profit from Tesla 20 times over. We have made 4 times thus far. According to my current estimation, we will produce twice or 3 times as much in the upcoming 5 years. American mutual fund manager and investor Ronald Stephen Barron, also known as Ron Barron, founded Barron Capital, an asset management company that specializes in providing growth equity investing solutions. With 52 years of research experience, Ron formed Barron Capital in 1982. Barron Growth, the $10 billion flagship fund of the buy and hold investor, with an annual turnover of less than 3%. One of the largest properties in the Ham is also owned by Barron. Pins, which he put together between 2001 and 2009 for a grand total of $152 million. Now it's worth a lot more. At present, Ron Barron has a net worth of $4.2 billion. Is Tesla going to be worth $10,000 per share? Someone could wonder. With this prediction, Ron Barron is obviously placing his bets. Where will Tesla be in 10 years is a question that must be asked. Selling EVs won't be the only source of growth for Tesla in the long run. The business has made a name for itself as a disruptor, and in the years to come, it might keep up that reputation. There exist other additional routes of potential expansion for Tesla. In order to draw in the greatest AI talent, the business is first concentrating on improving its autopilot and full self-driving (FSD) functions. In August 2021, Tesla held an AI Day event. Notably, Tesla's ability to lead on the FSD front depends on luring the greatest talent. The majority of automakers and IT firms have the financial means to pursue their goal of making autonomous driving a reality. Technical expertise may be able to distinguish the victor in this case. Additionally, Tesla is adding more drivers to its FSD beta testing program. That ought to facilitate the introduction of its FSD functionality. Second, Tesla is concentrating on these areas as well. It needs to keep making advancements in battery packs and vehicle software in order to keep its competitive advantage in EVs and FSD. Solar energy installations and energy storage are two more possible growth avenues for Tesla. The business has been making good development in both areas. Lastly, Tesla sees auto insurance as a potential area for expansion. It's clear that the business intends to approach this in a different way than conventional insurance providers. Tesla intends to estimate the likelihood of a collision and provide personalized insurance prices depending on it by using its extensive driver data for features like braking, turning, unsafe following, forward collision alerts, and so on. We'll see how Tesla does in this situation. If you liked this video, check out our other videos by visiting our channel.r.